Well, let's get the latest business news now. Fears that the coronavirus pandemic will pull global economies into recession continue to weigh on the stock markets, although the sell-off does seem to have eased slightly. Yuka Roye is here with the latest from our business desk. Yuka.
Well, those fears, Haxi, are not likely to go away anytime soon, but global shares are likely to rebound after Wall Street and Europe saw their worst day in over 3 decades on Thursday. The Dow Jones futures are pointing to a positive start. It's still a sea of red in Asian markets, though. Nikkei fell 10% in earlier trading before recovering some of the losses. The index closed down 6%. And Hong Kong shares also plunged before recovering slightly, but closing currently down about 3%. The decline in Asia, as I said, follows the worst day for stock markets on Wall Street and Europe. As panic selling accelerated, all sectors, including safe haven gold, plunged into the red. The main stock markets in Paris and Frankfurt both fell 12%, their worst ever one-day drops. This even as policymakers rush to announce measures to contain the fallout of coronavirus. Brian Quinn reports.
After Black Monday, Black Thursday. The Dow Jones Industrial Average closing down nearly 10%, its worst day since the 1987 crash. Investors reacting to the deepening economic turmoil over the coronavirus pandemic, particularly to sweeping travel restrictions between Europe and the U.S. announced by Donald Trump on Wednesday. Markets were already rattled by a crash in crude oil amid a price war between Saudi Arabia and Russia.
We have a big health crisis emergency that's having a lot of economic implications that aren't totally defined yet. And then also we have this big oil price shock that happened, bang, in an overnight scenario, Sunday night going into Monday.
Wall Street's dismal finish Thursday coming despite the announcement of a colossal market intervention by America's central bank. The U.S. Federal Reserve plans to add some $1.5 trillion to its balance sheet, pumping money into financial markets through asset purchases and short-term interbank lending markets. Many European indexes, meanwhile, had already seen their worst ever one-day drop. Paris and Frankfurt closing down over 12%, Milan's benchmark index off nearly 17%. Investors underwhelmed by new stimulus measures announced by the European Central Bank, including corporate bond purchases and efforts to boost credit to small businesses, but not an interest rate cut. ECB President Christine Lagarde and many economists are calling on governments to launch spending initiatives rather than rely on monetary policy.
There is only one option, and that is fiscal policy. We've already seen governments worldwide take these steps. Italy has announced a fiscal package this week, Australia, the United Kingdom, of course.
Even before Thursday's session, the virus-driven downturn had wiped more than 10 trillion euros off market value, as analysts warn of an impending global recession.
Travel, transport, energy and retail sectors have been particularly hard hit. Boeing, already facing financial difficulty following the grounding of its 737 MAX planes, has seen its shares plunge 60% from their highest point in the past 52 weeks. Disney shares dropped 13% on Thursday after it decided to close its theme park in California and delay the release of its latest movies Mulan and New Mutants. The price is down 40% from its 52-week high. Oil prices have recovered, though, and started swinging upwards, with the international benchmark WTI and the US Brent crude both up by about 2.5%. Brent crude prices are, but crude prices are still heading for the worst week in over a decade as the health crisis has reduced demand. In less than a month, the WTI fell from about $53 a barrel to just over $32 a barrel as major oil producers failed to agree on production cuts. In recent days, central banks and governments around the world have taken steps to limit the economic impact of the coronavirus outbreak in the face of a slowdown in activity and supply disruptions. The European Central Bank on Thursday announced that it would inject an extra 120 billion euros into bond buying and offer cheap loans to banks to encourage them to help businesses. The US Federal Reserve, the US, has cut interest rates by 0.5 percentage point, and the Treasury Department is expected to inject more than $200 billion of extra cash into the economy. Those measures, though, have not been enough to calm markets. French President last night called for a more concerted effort.
Nous, Européens,
We Europeans will not allow a financial and economic crisis to spiral. We will respond decisively and quickly. All European governments must decide to support businesses and return to normal life, whatever the cost. I don't know how the markets are going to react in the coming days, but this won't change. Europe will respond in an organized, collective way to protect its economy.
pour protéger son économie.
Well, that's it for business for now. I'll be back with more in about 45 minutes.
Yuka Roye with the business. Thank you very much.